Hello guys, this is a pre-market analysis of 22nd of April. Now, before we proceed, let's try to understand what happened yesterday in the Indian market because that is the base for today's move. Okay. Now, the uncertainty is still there. VIX, US VIX have increased. In fact, VIX in India, we have seen yesterday have came down almost 6-7%, and all those we will be discussing. So, if you see yesterday, Nifty and Sensex increased almost 1%. It was completely unexpected, and we have seen market have closed near last 6 week high levels, which is a very good positive sign also. And it closed above 24,500. So 24,300 to 500 level that we were treating as one of the major resistance, and the entire world know that the market will fall from 24,500, and everyone was expecting that, and the expiry was expected to be close below 24,500. So many might have got trapped, but anyway, option sellers made money as the market did not break 24,500 in a with volume or a big breakout or anything. It just stayed there for quite some time. Because of that, even 24,550 people have made money, 600 people have made money. So that's not a big deal because the market just went sideways after that initial gap up and then the first half up move. But it was surprising, right? Now, what is the reason? Initially, I thought it was very absolutely not clear in the beginning why you are getting such a move, especially when some uncertainty was there yesterday also. But I thought it is because Trump decided to give the reimbursement for those tariffs which have been charged, and those exporters who have been charged the tariff, they were asked to get the reimbursement. They were asked to register in the portal and everything. So I thought that could be the reason why you are getting such a big move. But HDFC was rallying almost 2%. So the reason, if you see, there was a relief from RBI, and we discussed this earlier also. There were some restrictions which were imposed on rupee derivative trade. At that point of time, we have seen how the banks came down because it was affecting the profitability of the bank. But yesterday, there is an update that RBI have partially rolled back those restrictions. And as a result, you have seen ICICI and HDFC both have taken Nifty, right? So HDFC is 2% up, ICICI is 2% up. So there is a strong rally which you have seen in the financial sector, and in the first half, if you see, IT surprisingly also have moved almost 1%. So in fact, that actually led that rally. But again, 24,500 was a major resistance. It tried to break, it tried to stay there between 24,500 and 550, and they wanted to close around 500. But then towards the end, you got a move and touched at 24,600 and then closed at 24,580. Again, there were some geopolitical hopes also because during Indian market hours, the expectation was US-Iran talks may happen. Because of that itself, there was some positive sentiment. But and later there are clarifications that this is not going to happen, that I'll be discussing after some time. So the final impact yesterday, if you see, the rally was broad based and most of the sectors have closed positive. But except in that first half, the three candles which you got, it was difficult to make money as an option buyer. That's an entirely different case, but it was a classic expiry session for option sellers, and beautiful session if you are an option seller. Now, if you look at the global developments, what happened overnight, now that is what going to affect India's market today, right? So whether this rally yesterday that we got will sustain or not, or we are going to get a gap down, or we are going to get a down move from 24,600 is what we need to see. When US market opened, initial sentiment was positive. The reason is, Trump was talking about a great deal with Iran, but then sentiments collapsed. So there were news which is coming that US Vice President trip to Pakistan is put on hold, and that is cancelled, right? Or put on hold at least. And Iran is saying that, it is they have not decided to attend the talks, and Iran is demanding complete lift of blockade first. So why US Navy is imposing blockade at Strait of Hormuz? What right they have? So this is a question, and the final position is that Iran will not attend the peace talks. This talk, whatever peace talk or whatever you call it as, Iran is not going to attend those deals or peace talks in Islamabad, and US trip also cancelled. Okay, so the narrative is now clearly shifted from talks may happen to talks cancelled. Now think about this. Yesterday, Indian market positivity is not only because of that RBI, because of this also, there were a hope, there was expectation that the talks may happen, and it was not financial sector rally, it was broad-based rally also. So now the things have changed. Talks may happen to talks cancelled. So I'm looking for a down move today. If we are getting a flat opening, it is a very good opportunity to short. We don't know to what extent it can go down also. So there is an escalation very clearly, which you can see, and US have seized Iranian oil tanker. And earlier there was a cargo ship also. It has been seized. Now there is an oil tanker also seized, and Iran's reaction is Iran called it as an act of war. So it is completely against the ceasefire, right? And Trump is also giving confusing signal. He is earlier saying that, expecting a great deal with Iran, but then he also stated that the military is ready, and US may bomb Iran. So all these are conflicting and confusing signals is what you are getting from Mr. Trump. Okay, now coming to the ceasefire update. Ceasefire, one positive is that it's extended indefinitely. There is no such timeline now, but blockade that will be still continuing. So what I want to tell you is that negotiation one way or the other is going on, but at the same time, the military pressure is happening together. The blockade is there, and saying that the Iran will be bombed and all those will be there. And as a result of it, the initial positive sentiment in the US market have completely turned, and Dow Jones have closed minus zero point 0.6, S&P minus 0.6, and Nasdaq also negative. And volatility index VIX have increased from 19 to 19.5, slight increase only. So remember, US VIX have increased yesterday and day before also. Indian VIX have fallen almost 7%, and that's why yesterday you have seen a massive premium decay, especially on the put side. So I was expecting that VIX may rise, and you may get a dip yesterday, but it didn't happen. It market was going up, VIX is also falling, put premiums were crashing, call premium was not moving much. So that was a kind of a day yesterday. That's why I told you it was a classic expiry for option sellers and not for buyers. And if you stayed out, if you survived yesterday, it's good. Okay. Now coming to oil price. Again, oil price have increased almost 5%. And finally, it closed at around 3% increase. So from 898, Brent crude is around from 96 to 99, WTI 90 to 92. Now it is trading at that level. So that means some negativity is there. Oil prices increasing. So we are looking for, some gap down opening. We may get 200-point gap down, right? So close to 150, 200-point gap down is what I'm looking for. Now, if you are getting lesser than that, maybe a 50-point gap down, or if you're getting a flat opening, or even if you're getting a 100-point gap down, what I'm looking for is short the market, right? But 200-point gap down, if it is going further, it will be very difficult to chase. Any up move is going to be a sell opportunity. So sell on rise is the kind of market that I'm looking at, considering all these factors that I have discussed. See, remember, when you take a view to substantiate that view, you need to have the context is very clearly explained. Now you need to look for your levels to enter the trade. So the view is there, the context is there. Now what is more important is the levels. It's not that you enter everywhere and then you make money on the downside. Even if you see, you may be right on the direction, but the entry level, if it is not correct, then you'll be in trouble, right? Unnecessary drawdowns, unnecessary stop loss you'll have to take. So avoid that. The context is set that I have explained. Level is there, view is there. Now important points where you need to enter. That's what you need to take care, because that is something which you can discuss only when seeing the market in the live market only, and not possible before the market. And we have live market trading sessions also. If you would like to join, you can get in touch with us and you can join, and you can see that also in the live session. So all the three will be aligning with you. Otherwise, these two are there. Now just focus on the levels and take a trade. You will not lose in the market. Again, if you look at US futures, morning is slightly trading positive. So that may reduce the gap down slightly. That is what I'm talking about. In case if that reduces the gap down that we are supposed to get, if you're getting something like 50 or 100-point gap down only, that's an opportunity to short the market. And Indian ADRs, if you see, HDFC Bank is positive. In India, it was 2%, but ADR, if you see, 0.5, but it is 0.5 negative. ICICI, it was 2% positive, again, slightly negative ADR. If you look at Infosys, ADR is also minus 1 negative, Wipro ADR is 0.5 negative. So ADRs are not supporting that rally which you have got. So it is showing clearly a negative bias. On that basis also, it is a sell on rise market. If you get an opportunity, sell. Again, yesterday, despite this, FII sold almost 2,000 crores. DIIs bought for 2,200 crores. As FIIs are continuously selling. And it was Nifty expiry, so expiry impact is there. You can see calls 33.4% unwinding, puts unwinding 30.7%. Because of that itself, more calls have unwounded. So PCR have improved from 1.11 to 1.16, which shows some slightly positive signal because of yesterday's market, but that will change completely today. More call writing will come than the put writing. So keep that in mind. And if you look at the participant positioning, in option side, retailers are 13.3% bullish, FI is 14.3% bearish, prop traders are 2.8% bullish. So retailers and prop traders are bullish, FIAs are bearish, and on futures, retailers are 75% long, prop traders are 54% long, FIAs are 77% short. So, see, yesterday, if you see what happened is there was some positive expectation and market believed there won't be any escalation, but reality is it's turned completely opposite. So we need to see what is going to happen, how severe the move will be on the downside. Gap down, will it again hold or will it give further rally on the downside? Iran have completely rejected the talks and calling that blockade as an act of war or act of piracy, right? And also want to take the toll from the ships. So that is Iran's demand, which means the conflict is still unresolved. So US blockade is continuing. Iran is also restricting the ships, so oil supply is getting disrupted, oil prices increasing, which is again not good for the market. Right. So these are the things. And if prices is continuing, there could be serious economic problem. Yesterday, we have seen 300-point rally. Now, almost 250-point correction we are expecting. So yesterday's rally, I think it will be taken out today. Right. So currently, we are looking for 150-point gap down. If you are getting anything less than that, that's an opportunity to short the market. If you look at options, 24,500 straddle is trading at a premium of 500, 600 rupees, which is very good, right? So if you see that, what does that mean is implied range is 500, 600 point on the upside, 500, 600 point on the downside, which means 25,000 to 100 to 23,900 is the range that we are looking for this week, just by looking at the straddle. So important support as of now is 24,000, resistance 24,800, which is Fibonacci 61.8, because 26,300 it was all-time high, came to 22,200 and now bounced to 24,800, which is 61.8%. So that is also a major resistance. Apart from that, the market is completely news driven. So take care of all these, right? And then trade responsibly. Yesterday's market I've already discussed. So Nifty support resistance I've already discussed. If you look at oil data, call side maximum is at 25,000, 24,800, 24,500. 24,500 is a straddle people. Put side, if you see maximum at 24,000, that is where the safe bets are there, right? Because I told you the range, and then 24,500, which is straddle people, and 24,200. So yesterday's rally, that is driven by hope of no escalation and peace talks and RBI relief. One thing is taken out now completely. So the reality is that the talks have cancelled, oil prices rising, ADRs are negative, IT is weak. So we are looking for a gap down and further down move, right? So let's see what is going to happen. So trade responsibly. And if you would like to trade with us live, you can join us. We have the live market mentoring sessions. Get in touch with us. I share the details in the description. Check out that. Contact our team. See you there.